Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. Hello everyone, welcome. So today we're going to talk about some commodities and dollar strength, weakness, / should we be trading it long, sort of short. So I'm going to start off here with silver. So we talked about silver long here and we just got the 3-to-1 out of it there. And then we talked about silver long here and we got a 1.55 out of it. Yes, we were in it from the mid-December to the end of February. So you're in this nearly for 2 months, well, nearly 3 months, moving sideways, and eventually it hit the 1.5 to 1. But since then, we've had a little bit of dollar strength. So we had non-farm payroll was good. We have the interest rates was 0.5%. So everything indicated that dollar was getting a little bit stronger. And then we have this sort of spike to the downside. So remember, dollar and gold. So if dollar gets stronger, gold is going to get weaker. And if gold gets weaker, silver is going to get weaker. So they all follow that same sort of route. So we have come down here. So we had this sort of little zone. Now we have this sort of zone between these two areas. Now we have this level here, it bounced there once. Do we have anything more historical? No, so it bounced there once, twice, 3 times. So we have a sort of a zone there rather than a level. Okay, and it's sort of bouncing between these sort of zones. It's hit there a couple of times, it's broken through, and we're back in that sort of zone there. Now we're at a pretty pivotal point in the likes of this. Now if we go up to the higher time frame and have a look, which is the weekly, we can look at this. We have a phase 1, we have a phase 2, we have phase 1, phase 2. Now I suppose the whole question is this going to sort of take off to the upside, or is this not? Is this going to take off to the upside here, or is that going to continue going down to the downside? And that's a question that we sort of have to work out. Now, if we look at this historically, there's 1, 2, 3 lows and they're getting higher. If we look at this high, high, and high, the 3 highs are getting higher. So this tells me that we're expecting this to go back up. We're expecting silver to start getting stronger, which in turn would mean dollar is starting to get weaker. So let's have a look at the bigger momentum. Okay, and if we look at the bigger momentum, we also have this going on. So we looked at the overall market. Does that actually go back to there? It does. Look at that. So hit there, drop down, hit there, drop down, hit, dropped, bounce, dropped, bounce, dropped. So then the question is that we sort of have this, look, 1, 2, 3, 4, 5 touches on this level. Is this now a point where we're expecting it to go up? And then I suppose the question is do we take profit before we hit this trend line, or are we expecting it to break through? Now, my thesis is always par close the position, move your stop loss to break even, and then potentially trade through it if you want, or jump out of the trade completely at that point, if you're of the mind that this is going to go up. If you think that this is going to continue going down, we then do not trade that. We need it to go back up to there, and then when it hits there, then we're looking at the short. That's the point where we're looking to short the market. Okay, but we can't trade it short at the minute. We need a phase 2, And then once we get that phase 2, then we're looking for the next momentum. So they're the analysis. That's what we're looking at this particular point. So if we zoom in a little bit further, we then have a look at the likes of this potential entries on this. A long position, entry there, stop loss below it, and at this particular point we have a 1.75, so a little over a 1 3/4 to 1, and that's potentially where we're looking to go on this particular trade. If we drop down to the daily chart, that's where the entry is on the weekly. Now on the daily, you may be looking at sort of this. So see this green bar? So entry above it and the stop loss below it. But again, at the end of the day, this is an aggressive movement. This is a weekly trend and we're looking to get in on a daily chart. Okay, so this is a weekly phase 2. Is this a high probability position? No, it's not. It's not a high probability position, but again, there is momentum there. There is a 3 to 1 to run till it hits to this point again. And it's just a matter of a question is it a point where dollar is going to continue getting weaker? We'll answer that question shortly. So back on to gold. Again, we have a very similar position on gold, identical. So gold has come back from this position. So we had 1, 2, 3, 4 touches on that level, 5, and we're now back at 6. So again, we have that low test bar, so entry there, stop loss below it. This one was placed a couple of days ago, so by the looks of this, we're actually triggered in. So we're slightly triggered in. So in this particular scenario, you're 0.5% down. So if you risked 100 quid, you'd be 50 quid in the negative at the moment. Again, there is momentum for this to run to the upside. There's a clear 3 to 1 here. But if we go up to the weekly is in phase 2. Okay. So in this particular scenario, we have a phase 1, a phase 2. We have the overall momentum is coming down here. And the problem with trading the smaller time frame on the likes of this is we never know when the bottom is here. Okay, so the bottom is coming down and we don't know whether that is the bottom. So is it a high probability trade? No. But is there a trade there? Yes, there is. Yes, there is. But it's not a high probability one. And then over onto the dollar index. So let's have a look at the dollar index. So we did have a trend line here. We're looking at a bounce there once, twice. And then we're looking for a bounce to the downside here. It didn't, so it moved pretty sideways and then moved back up. So again, I'm going to remove this trend line here. And we are coming back into sort of this level. Look, 1 touch, 2, 3, and now we're on our 4th touch. Now, very, very similar to the likes of silver and gold. Is this the point where this is now going to drop? Or do we need it to come back and hit that level? So the idea at this particular point will be to have a short entry there and a stop loss above it. Now, if we put a stop loss above this high here, we have a pretty big stop loss on this. So, and if we look, we have a high there and here. So that's where the ideal place for this stop loss to go is. But I understand that a lot of people look at this and that's a pretty big stop loss. Will probably go just above that floor there. So if we are wanting to put our trade here, I would suggest waiting for this to come back to here, which would give us a better entry. So I'd expect that to go have 1 or 2 more days going up and then hit that sort of floor. And that's sort of where we want this to go to. So getting in underneath that is an absolute no for me. Your stop loss has to go above that horizontal and then or above here. So there is the safety. That's a safe place for there. We have 1, 2, 3 touches, and that's where your stop loss should be. So for me, it's hold on for a couple of days and then go down, which and then in turn, if that's the case, we would expect silver to continue coming down a little bit. It may not make a lower low, but would expect it to come down for a couple of days. And gold, you would probably expect gold to make a lower low. So in this particular scenario, you'd expect to be triggered out of gold, but that's if the likes of dollar index goes back up into this area. And that's something we sort of don't know. And I suppose lastly, we'll have a look at Euro USD. So Euro USD is the inverse of the dollar index. Euro USD is 60% weighted in the dollar index. So that's why it looks pretty similar to it. And again, we have a pretty similar trade here. Entry above the bar, stop loss below it here. And looks like we haven't been triggered in, or depends on the broker whether you would have been triggered in or not. If you're in this, it looks like if you risked 100 quid, if you did get triggered in, you'd be 60 quid down. But again, we have to sort of wait and see what's going on at this sort of horizontal level. But they're the kind of things we have to take into consideration when trading. Looking at the likes of dollar. Dollar is at a transition. So we, at this present moment, do not know whether dollar is going to get stronger or weaker at this particular point. If you like what you see, click on the subscribe and like box, and pass it on to friends and family so they can see as well. Thank you very much, everyone. Bye-bye.